Richard here on the 24th of November, being Wednesday, and this is a review of just what's happened overnight given the Korean issues as well as the ongoing European sovereign debt potential of default. The US dollar index broke out last night. This is the daily chart over this long-term descending trend line that we've been looking at for some time, and the potential of course is that we're going to go up higher, but in the interim these things usually come down and retest their previous support line, so we'd expect that to happen. And I think that in the event that that is an ABC correction, then we're likely to get another 5 waves up. So 80 was a big Fibonacci and psychological round number. It's tested that resistance, and next time round after this pullback, presuming there is one, then we're likely to go up beyond 80, and the next targets would be back up at the resistance here at about 83. So that would mean the euro would be heavily down, gold would be heavily down as well. So just looking quickly at the Dow, it came off and tested again the 11,020, and it looks like it's rallying up, but one would expect it to continue down to test 10,800, and that would set up a wave 4 for a Santa rally back up to certainly above 11,400 in the event that it does, and on to 11,600, possibly even as high as 11,800 as round numbers. The Australian market, you can see today, it followed down overnight. This is the SPY. It hit our target of 45.30 and has bounced off and is now looking like coming up to retrace and hit the what was previous support is now going to become resistance, and then it would fold back down. Looking at the Australian dollar, it's set up a head and shoulders pattern. Not all of these come off, about 70% chance, but it's currently testing the neckline, which is here at about 97. The next level down is 96.50. That's been a long-standing target, 96.50, and beneath there is 95.50. So that is previous support here. As we look at it, drop a line over that. It's actually lower. It's a Fibonacci retracement, but at any rate that's even lower. That's 94.50. But if the head and shoulders actually comes off, then there would be the possibility of a larger downsize target, and the way we'd measure that is by copying that and extending it down, and then dropping this horizontal line, which would be 90.23.50. So it could take a while to get there if indeed that is confirmed, but at the moment it's setting up that way quite nicely. Looking at materials sector, of course the materials is really what's been holding up the Australian market. Everything else has been pretty much pushing down, but it's broken through. We went long, the gap was closed, and then of course support was broken yesterday, so we were stopped out of this at 1330, I think it was 13,300. But nevertheless, we'd expect some more downside activity there. On materials, that means gold is coming off with it. 13,120 would be next stop, followed by 12,820. Looking at financials, you can see that this is quite a bearish pattern. We put up this wave 2 question mark. This is the ABC. Well, certainly that looking like paying off. These are 1s and 2s, and then we're into an impulsive 3 down here as a minuet or a lesser cycle Elliott wave. So we'd expect, if the market rallies similar to the ASX 200, to come up and test its previous support. Have no doubt this would probably do the same, and then continue on down to our first target at 40.60. I thought we'd go in and have a look at some financial stocks at this point. So starting with ANZ, we've talked about this head and shoulders before. Indeed, this is the target for it, down as low as $16.50. Certainly over the last few days that looks like it's confirming. So you know, the real opportunity is in these head and shoulders is to trade to the neckline, watch for the bounce, and then on the breakthrough is to take the target south. But the breaks occurred on this upper trend line, and that would be worth trade depending on what happens between now and the next week or so. But given that it's New Year, sorry, not New Year, but Thanksgiving in the US, it'll be pretty light volume over the next few days. This is Westpac, and these stocks are in no particular order, but certainly this complex correction here is unfolding. Target 1 is down at $20. We set that some time ago up at around $23, so that's unfolding, and that doesn't help us at all. CBA has pushed down, similar to this previous pattern. Volume is pretty low at this point, but it's certainly looking like breaking down and hitting our target 4,600. So that would have been an $8 trade in there. You know, nice support off the 50 moving average, or resistance I should say, and that's likely to keep going, so we'd be looking for a bounce there, and then possibly, you know, it moves back up if this Santa rally does eventuate, would move back up to test that 50 moving average again at around $52. This is IAG, trading sideways in a channel for a long time. These are weekly charts, of course, but the relative strength is continuing upwards, and a little bit of weakness there today, but nothing to suggest that that is tradable. Here is Lendlease. You know, it's been operating within the channel for some time now, and is testing the upper boundary of that channel on a big volume spike, rising relative strength, but this is still a wave 4, so this could be a 1-2 and then down. If in the event that it does unfold, then it could move quickly down to sort of that 550 mark. Here's National Bank. Well, this is why the indice is moving down, because you know, you can see here this is a powerful move down over the last 3 days of about $4 odd. The target at $21 still holds, and you know, given a break over this line here, that's quite tradable to that level. But certainly the bearish engulfing pattern up here off the 50 moving average is indicative of resistance. And Perpetual, it's got a big gap open here. We'd expect that to be closed, so there's $6 at least in that trade. We'd look for weakness in the relative strength index to help us make that decision, but the target in the event that the markets unfold are down around so that 25.85 mark. On QBE Insurance, well, we talked about the fifth wave to unfold. Well, this is the weekly chart, of course, and it is pushing down. Volume has dropped, so you know, there's not a lot. Well, there's a volume spike there, so you know, clearly that's what broke it down in the last 3 days. But you know, the target would be this previous low here at about $15.15. Suncorp Metway, you know, it's held up better than most of the banking stocks. Certainly it's completed a wave 5 now. It doesn't have to necessarily go any higher to confirm that, but certainly a break of this rising trend line would be a bearish sign, down for 1 and up for 2, and then impulsive down for 3. It's the waves 3s that we want to catch, given that they're the longest of the early wave cycle and the most powerful, and usually travel in straight lines. For example, here is a wave 3 through there, you know, like a $4 rise. That's 100% on your money. In the event that this holds up and support is found, then it'll take out this high at 973 and go higher towards $10, which would be the target. Westfield, travelling sideways, not much joy in that. That would be a long-term hold in someone's superannuation portfolio, and Westpac we've covered off on. So they're the fundamental charts for this session on the financial sector, and certainly if we just go back to the head and shoulders shown by ANZ, in the event that this does break down, that'll be a very powerful move and probably a great trading opportunity.